All right, we are live, guys. Welcome back to the channel. Today, we're going to do a real estate market update the day after elections. Wow, that's a whole nother topic. If you're curious about how the market is impacted during an election year, go to my page and check out, I think it was my second to last video. I do a whole video showing previous data of how elections affect the real estate market. So if you guys are curious about that, take a look. But in today's video, we've got a couple shifts that I want to discuss with you so that you're not surprised with how the market reacts in the coming months, not just from here to December, but really 2025, early springtime going into even summertime. So let's rock. Let's do this. Thank you for joining. I've got some data I'm going to share, and I'll walk you through a report that Colorado Home Realty does on the market. This is very insightful stuff. And then alongside that report, you guys get my take on everything, which I think is very beneficial to have a professional here to run you and walk you through what's actually happening with the market. In particular, some shifts that I think are notable that are against the current trend line of historically how things have really been with the real estate market. So let's dive in. And guys, last time I did this on my webcam, it shut off. So let's just cross fingers that doesn't happen. And if you're new to the channel, please say what's up in the chat. If you guys have real estate questions, throw them in the chat. We're here to answer everything for about the next 10 minutes. And then I'm out. I want to try to keep these as short as I possibly can for you guys. But first things first, brief here on Colorado Home Realty. And I'm going to just do you justice and read this and then tell you my thoughts. So slow winter with interest rates skyrocketing in such a short period of time. You might think the market would come screeching to a halt, and maybe it will. But the most important behavior dictated by rates is buyer showings. Guys, this is where it gets interesting. Bear with me. While showings have declined for 6 straight weeks now, seasonal trends, typically that happens every year. And last week they hit the lowest point since April for a non-holiday week. Showings are substantially higher than the same time last year and the year before. Okay, so what's going on here? Let's look at this chart. This is one of the shifts that you guys need to know about, and I think is very, very noteworthy. So if we look here, weekly showings by year. So we're looking at the total number of showings that's happening per week on homes that are actively listed in the market. Uh-oh, I hope my video didn't shut out on you guys. It did. No. The good stuff. You might not be able to see me, but it is what it is. So when we're looking at total number of showings, now the reason we're not showing data from 2021, 2020 is because the market was just way out of control in terms of the buyer activity. Because why? Well, interest rates were the cheapest they've ever been. Now that they're up in 6 to 7s, sometimes around, I think it was 23, hitting 8%, you see total amount of showings decline. And so what you can see here actually with this dark blue line, that's when rates were at 3%. So we're not comparing to when rates were 3% because that's not the market we're in. But the market we are in is when that blue line hit a low right here in 2000, week 25. And then week 25 of that orange, week 25 of this light blue has essentially skyrocketed in terms of number of total showings, and has remained elevated throughout the half point of 2024. Now, why is this important? To me, it's important because we have more buyers than the previous 2 years, and rates haven't really improved all that much off of what the rates were in 22, 2023. So this is telling me we have a lot of pent up buyer demand. Now we'll get back to that here shortly, but let's keep going. So this is, what is this? A new set point of buyer expectation around interest rates. Exactly 1 year ago, rates hit their highest point in 23 years and showings were abysmal. 2.5 years ago, rates went from 3.5 to 5.5 in 3 months. And showings plummeted by 150%. That's this line right here, guys, this dark blue. But today rates are closer to 6.5 and showings are 50% higher. Total number of showings are 50% higher. I'll get more. I'll touch base on that here shortly. We'll see what happens to seasonal buyer activity over the coming weeks, but it appears now at least the level of interest rates remain below some emotional or economic tipping point that still encourages buyer action. Guys, first, I am curious. What do you guys think after the election? What's going to happen with the real estate market? Post it in the comments, and let's keep rolling. The news is for sellers. This news is decent, but the market still feels slow. Inventory remains above 10,000 homes. And with elevated inventory, showings per listing continue to slide into holidays, ending last week at 1.97 showings per home. Couple that once again, over 30 showings to get under contract, and some sellers are just giving up. How many sellers are giving up? Now, guys, this is an important statistic. 784 properties were withdrawn or expired. 79 of those came back on the market. So 705 sellers, or 7% of the market, gave up. Now, what's interesting about this inventory, supply, demand, showings ratio is really the shift that's happening in the market that I want to touch base on here shortly. We want to see expired listings because we want there to be a closing of the gap here in inventory. Where's this at? Inventory. I was looking at showings per contract comparison. Again, we'll cover that here shortly. What I'm looking to do here, guys, is to give you both insight on the market, but then I'm going to tie these things together at the end. So hang with me. Last week, 68.7% of properties sold for less than the original asking price, and 49.1% of properties experience a price reduction. Real quick stat, and then I'll tie all this in for us. Average sales price year to date is $686. I think that's up from our previous videos. But that's for all properties, all property types. If we go here and look at just single family homes, that should increase to the sevens. So if you're looking at a single family home in the greater Denver metro, average sales price is $776. Now, what does all this mean? And what's the actual shift in the market? Guys, here's the shift in the market. The shift in the market is that overall, there's significantly more showings, total showings on a week-to-week basis than there have been in the past 2 years. This tells me that there's an incredible amount of pent-up buyer demand. And getting back to the shift in the market, with almost 50% increase in the total amount of showings, we have an incredible amount of pent-up buyer demand. Why this is important is because if rates improve, even by 0.5%, let's say a full percent, we're going to have a really, really, really hot market come spring because we have all of these buyers looking at homes. Now, in today's current market, for those of you potentially looking to sell homes, even though there's an incredible amount of showings relative to the past 2 years, it's really only accumulating to about 2 showings per home per week. Now, what does that look like relative to when rates were low? Man, we were getting about 18 showings at the peak for your listing per week. That's absolutely crazy. As of now, even with the increase of homes, we're relatively even with the past 2 years in terms of how many showings per listing are occurring per week. But what's interesting here and where this shift is also occurring is that it's taking more showings on your house before you go under contract. So even though we have all this pent-up buyer demand, it's taking longer for your house to sell because you need more showings total on your listing before a buyer offers. That said, if rates come down, one, this number is likely going to increase because this isn't accounting for all those buyers who are on the sidelines because rates are too high. But two, all these buyers who aren't transacting are going to start transacting. So we'll likely see a increase in total amount of showings. That will in turn increase showings per listing. And I think it will decrease the showings that it's going to take for your house to get under contract. All of this really leading to an incredible, potentially, an incredible spring for sellers. Now, buyers, don't be surprised if this happens. I'm telling you right now. So, what do you do as a buyer? Well, if life circumstances allow, you buy right now or buy before interest rates drop and you have this influx of buyer activity and competition, which will in turn drive up prices, making it harder for you to negotiate the best deal possible for yourself. The time to do that really is between now and, I don't know, maybe January, February, but ultimately December. Now, don't worry. The one thing buyers you have going for you is we are at all-time highs relative to the past. What is this? You know what? I have the graphic. Let me show you the actual graphic of inventory. Colorado servicing the greater Denver metro. I'd love to serve you. I'd love to help you. Now let's look at inventory, guys. Inventory, what you're going to see is this big, huge gap in current inventory. Yep, there it is, 2024. We're at historically high inventory rates relative to the past 5 years. So buyers, what you have going for you is that if inventory, then that will somewhat offset and balance the increase in buyer activity, therefore maybe giving you some hope that you still have the ability to negotiate. Prices don't take off quite as much as they have in the past when rates decrease and buyer activity increased with it. And so there is some hope for you. Relatively speaking, I think that overall we'll have a balanced market unless we see an incredible improvement in rates. And by incredible, I say, man, if we're seeing a percentage decrease in rates, a percentage improvement in rates, I think springtime is going to be very, very hot, even with an increase in inventory. But that increase in inventory will keep things sort of stable. So ultimately, guys, sellers, you'll probably hear me say this on every single live going through December. Now is not the best time to sell. It's going to feel slow. It's likely going to get slower. Prices may continue to retract. Buyers are going to have the leverage in negotiations. Seasonally, it just is what it is. Generally, it happens every time this year or every time around this time of year that notoriously it's just not great to sell in winter months. Even more with rates remaining elevated and high. But as rates come down, that's going to be really great for you sellers. Whether they do or not, springtime is likely going to come with a lot of buyer activity. That's the time you're really going to want to start eyeing putting your house on the market. But for buyers, guys, now until about springtime, more specifically now until December, it's going to be the best time ever for you guys to buy, getting ahead of and in front of buyer competition, especially if rates improve. And with that, guys, again, sorry